Good evening, traders. It's Sunday, the 30th of December. Hope you all had a wonderful holiday, a wonderful break for Christmas, and are back ready to smash the markets as we head into 2019. Last week, we had quite an interesting week. Not much in the way of fundamental announcements to be expected this close to Christmas. And again, heading into this week, we're looking at a break across all markets as we go into the new year. Straight off the back of that, we've got manufacturing PMI for the pound on the 2nd, so Wednesday, and then we've got the same for the US on Thursday. We've also got services PMI for the pound, and then obviously Friday, being the first Friday of the month, straight into non-farm payrolls and Fed Chair Jerome Powell speaking on Friday to kickstart the year. Just give us an outlook of how the dollar is looking heading into 2019. So we could see some nice volatility to start the year off, and if we actually start by looking at the dollar index, so here we're on the monthly time frame. I do have this long-term Fibonacci drawn from this high to this low. You can see that we just came to that refined region around $97.50, and we've now pulled back towards that $96 region. So the moving averages have crossed over, but overall we could actually be looking for the market to turn at this point. We will need to see a break of this region to head down lower, with initial targets around the $94. And if we scale down to the weekly, we can just see how this is playing out. So we've now broken through the exponential moving average, and we are just edging ever so slightly lower. As I say, this $96 region is going to be quite significant. We had a breakout of this uptrending pattern, this uptrend line. Price came back, retested that, and is now falling low. We're just struggling at these prior lows, so we may see further consolidation from the dollar. However, as I say, first week, looking to Friday for that volatility, we could see the dollar push lower. US equities have taken a beating over the past week, over the past few weeks, but overall, especially long term, I'm definitely bearish on the dollar. As I say, $96 region, we could see a retracement before then heading lower. If price does roll over from that $96, we are looking at that $94 level. So let's look at how this translates to our currency pairs. So here we have the monthly chart for Aussie dollar, and after that little bit of optimism in November, we can just see how December has absolutely pummeled the Australian dollar back into the ground. In my previous analysis, I have mentioned though the significance of this 0.7 major level. So despite this big bearish engulfing, it's actually engulfed, well, we're not closed yet, so there is still hope for a retracement, but for now we're engulfing the past 1, 2, 3 months price action, as well as this rejection from the moving average resistance. So we could actually be looking to head lower. I mean, my next target for the Australian dollar, we would be looking down towards 0.65, the major support level. However, as I say, we will be looking for price to break that 0.7 first. Last week, price closed as a doji candle, which does suggest indecision. There wasn't a lot of movement in the market as price just sits on this level. So we could be seeing a morning star formation here, bullish price action back towards the moving averages. But I do think we may still see a quick spike down towards that 0.7. We saw some bullish strength here. Here was that bullish engulfing from the November candle, which took out the prior high. So we can see that the momentum towards the downside is slowing down somewhat. However, the past few weeks, as I say, we've just seen it slammed into the ground. So we don't have full confirmation that the market is turning upside yet, but I'm not convinced that we will just break straight through that 0.7 major level. You can see that price did dip below the 0.7050 support, which is now turned to resistance. Price retested that on Friday and has fallen back below. As you can see, where price is currently sitting, there is an amount of support, and Thursday's lows actually formed a double bottom with the lows from October. So we will be looking at potential further consolidation at this region. As you can see, price is within a range here, looking at something like this. So we may just see the moving averages converge as price makes an attempt at the upside move. As I say, I'm not ruling out the possibility to spike down towards that 0.7 major level, and as you can see, continuing to reject the moving averages. Price has also formed a lower high here, a lower low prior to that. So we may just be seeing one final push towards the downside at 0.7,000, sorry, before reversing at that level and making a move towards the upside. If we now take a look at Usdjpy, the monthly time frame, very bearish, back below moving averages. I did mention that 114 major level, but then again we are sitting just on top of that 110 level, at 110 monthly support. On the monthly time frame here, what you can actually see is a potential inverse head and shoulders pattern, with these lows forming the left shoulder. We have the head here early to mid 2018, and now we could just be forming the right shoulder. So we may still be setting up for further consolidation within this region. However, given how bearish this candle is looking at the moment, and how bearish we are on the weekly time frame, we could actually be heading much lower longer term for this pair. So even looking at breaking these lows around the 105 level. So as we can see here, weekly time frame, we've got this uptrend, bearish break, moving average crossover, continue to look bearish. Last week closed bearish. I would like to see, I mentioned in my analysis last week, I would like to see price come back up to retest this 112 in line with the moving averages, and I'm still not ruling that out. So I am bearish overall, but I do think price can still turn upside from this 110 monthly support, return to 112. I'm not so sure about price action past that level. However, it's definitely possible to revisit that 112, and in a way it's somewhat I feel as though price to an extent needs to retest that level before then heading lower. But I mean, don't hold me to that, guys. We may well just see a straight break through that 110 to then head towards 108 initially. So if we take a look at this on the daily time frame, you see we are still looking very, very bearish. We had a glimmer of hope on Boxing Day, but then the exponential moving average held strong and pushed price lower. So as we can see here, we are just looking to push towards that 110 monthly support level before seeing a retracement. I mean, initially I anticipated that we may see a pullback from the 111 level and could see that back could see the market back up at 112.50. And if we just try and get a downside fib on here, draw that to that 110 monthly support, we can see that that lines up the retracement levels very nicely with that 112 and 112.50 resistance levels. So I'm definitely not ruling that out despite all of this bearish price action. But I think it's just going to be a case of seeing how price responds to this major support level. You can already see the wicks to the downside suggesting that price action is slowing down slightly. However, as I say, we're still seeing these bearish candle closes. And again, we've got this counter trend on the 4-hour time frame, which price broke through on Friday. So the retest, and now we're just attempting to break through these prior lows to hit that 110. We'll still need that further confirmation of direction from that 110, because as I say, we still don't have anything concrete to say that the market's retracing just yet. Even on the 2-hour time frame right here, you can see that price is, despite this high here, well, actually with this high we still failed to break through this region here, which would have actually signaled to us that maybe we're not ready to go higher yet. Still need to take out these lows, which we are currently doing. So price is still forming lower lows, lower highs, lower lows. Could be just seeing that last lower low at that 110 region. Again, 1-hour time frame. Still haven't seen that confirmation that we are turning towards the upside again. Price tried to break through the moving averages, failed, converged slightly, but as of yet are not nearing a crossover. So onto Usdcad, and despite the dollar weakness, Usdcad has been flying off the back of lower oil prices. And actually, my analysis last week, I evaluated that we may actually be seeing a double top formation with these highs before heading lower. I do think that there is potential to see oil head slightly lower, but overall, if we take a look at what's happening here, I do think that this is essentially just a correction. So I believe that this is the impulse. We're seeing a corrective wave here to form this lower high. We broke through the prior lows with this push in 2017 and the start of 2018, and then now I'm looking for price to form this double top formation to then head lower. I mean, this is very long term, but you could actually draw in a range here from around that 1.2450 to around the 1.3800. So I would be looking for a rejection, push slightly higher before a rejection, and then to mount lower on this pair. Obviously that would line up with dollar weakness, as I've just mentioned, as well as oil strength. I mean, oil has lost a lot of its price in the past couple of months. I do think it can go slightly lower, but then we'll be looking for prices to head higher as supply is tightened into 2019. So onto the weekly time frame here, and continue to look bullish. Last week, a little bit lower volatility, a little bit less liquidity in the market, so price movement wasn't as great, but we did still close bullish. Now, if you remember, we did have a weekly fib on here which looks something like this, and as you can see here, we have actually just completed this Fibonacci. So I would be wary of reversals anywhere from this point. However, overall, as I've just mentioned, I do think that we can push towards this 1.3750. I mean, we haven't seen a retest of this 1.3500, so we may still see that. However, if we do in fact get the push straight to this 1.3750 and then the reversal, I don't think that this 1.3500 will hold for very long. It's going to be one of two scenarios in which I think we may see a reversal to retest this level before then hitting that 1.3750, or we may just continue straight towards that level. Should that be the case, then I do anticipate price just melting straight back through that 1.3500 all the way to 1.3250 before 1.3 thousand psychological support, that is. So if we take a look on the daily perspective, it looks like we've just been trending upwards forever on this pair. But what I want to show you on the from the longer term perspective is, although on Usdcad it does feel as though price has just been going up and up and up, if we look back to this bull trend over here, the trend that we're seeing right now is actually nominal compared to the price action that we're seeing here. For example, if you look at the end of the end of 2014 coming into 2015, just January of 2015, then the price increase was actually a lot greater than what we're seeing now. What we're seeing now is just a very small bullish trend. So nothing to get too excited about. And as we see price action start to slow down, we can be looking towards downside targets. However, as we've seen in the other two markets that we've analyzed so far, we haven't had any kind of confirmation as of yet that the markets are ready to roll over. So we've had slight hesitation towards the upside, but as you can see here, above that 1.3580 daily support, above the moving averages, and the market is still closing bullish. 8-hour time frame, you can see that we have had this tweeze top, these two upside wicks, and the last candle closing as a spinning top, so indecision. Just suggests that we may see the market pull back, roll over to at least the 1.3580. However, also seen the rejection from the moving average, and I wouldn't be surprised to see price action continue upside, take out all of the stops above these wicks, because I guarantee there'll be a heck of a lot of people who have shorted the market after seeing this. But as I say, we don't have that confirmation as of yet. We are seeing indecisive price action. However, as you can see, you've had a low, a higher low. We'll need to break this low to even consider the potential for shorts. Obviously, that would line up for a moving average crossover, break through that 1.3580 to short down to that 1.3500 major support as our initial target. But as price continues to edge higher, we're looking for a break through these highs, to close even above that 1.3, around the 1.3650 we'll be looking at. So if price closes above that, then we can expect price to head towards that 1.3750 weekly resistance. Overall, I am really interested to see what happens in the market this week. I think we'll be given a really good idea about where the markets are heading for pretty much the year ahead. I think there's a lot of consolidation and a lot of, I want to say, strange price action towards the end of this year. the past few months and past few weeks, it does appear that the markets are setting up for a big move in 2019, and however that comes, we'll be ready, we'll be waiting, we'll be anticipating that move, but overall we are spectators in this, and I'm very excited to see what that means for the markets. So finally, onto sterling, and we've found support at that 1.2500 major support level. And you can see that we've pulled back from that level. Overall, we are still bearish. You can see these rejections from the moving average resistance, and each one of these months, so we had September as a high, October lower high, November lower high, and should we close anything like this, December again will be another lower high. So despite that rejection from that 1.2500, I do think that we may return to that level before seeing upside overall. Obviously, as I say, I do think that the pound, I mentioned last week, I believe, that I think into 2019 we may see the pound actually pick up some strength. Which obviously would also line up with dollar weakness. Taking a look on the weekly time frame, actually backs up my bias. Despite this rejection from that 1.2500 and bullish price action following that, we've actually seen a rejection from that 1.2750 in line with that pinpoint rejection from the exponential moving average. So we've pulled back to close within the range of this bearish candlestick here. So I do still think that we will see 1.2500 support met. And on daily time frame, this is where it gets a little bit more interesting. Very choppy price action as the market attempts to determine direction, but overall we are within this range between 1.2620 and that all important 1.2700. So Friday the market closed bullish, had this nice morning star formation back above the moving averages, but it's important to point out they haven't yet crossed over. They are converged, and there is definitely potential to see a crossover, but in order to accept the upside here, I would want to see a break above this 1.2700, which price is currently respecting very well, then a retest and continuation. Overall upside target at 1.3, at the 1.3 flat, that major psychological level. However, for now, if we take a look at this 1.2700 level, if we see how price responded as support there, absolutely taking off, and again here it is quite a significant level. We've had a lot of accumulation at this level, and I wouldn't be surprised to see price spike through this 1.2700 again. with it in this week, at the beginning of this week, before then heading lower. On these smaller time frames, we are given the suggestion that price is bullish to some extent. So if we take a look at how we were trending down before, this is on the 8-hour time frame, creating lower highs and lower lows. Then what we've actually seen is price begin to form these higher lows and these minor higher highs. Obviously we're still yet to break this high here, which is our significant high. Obviously if we take this as a downside Fibonacci, you can actually see that this series of higher highs and higher lows is actually just a correction, and price is currently rejecting this refined Fibonacci retracement zone. So we did have that spike towards that major resistance in line with the 78.6, but rejected that, and price was slammed back below that 1.2700. Currently trading just at the bottom of this refined region and above the moving averages, but I am sticking with my guns here and anticipating that we do see the downside move. So initially targets will be at the 1.2620 before pushing to that 1.2500. You can see choppy price action around the moving averages. They are crossed over to the upside here again on the 4-hour time frame. We'll be looking to see how price responds as we come back down to test those as an area of dynamic support. As I say, I do expect price to break back through those to see further downside. So if we take a look, we could even draw a Fibonacci on this 4-hour time frame, and you can see we've even come within that refined retracement zone, and we'll be looking to break that 1.2620 to head towards that Fibonacci extension. So we could actually see something like this, push down towards that 1.2580 retracement to retest that daily level, and then initially downside targets at 1.2540 before 1.2500 overall. We'll have to see obviously how price responds to that 1.2540 initially, because if we actually take this as a range here and then duplicate that, that does actually line up very nicely with that 1.2540 and these lows just here. So I do actually quite like that as a scenario, but again we'll just have to see heading into this week how the markets open, how price moves on Monday. Markets closed on Tuesday, and then so again a bit of a disjointed week, but as I say, heading into the end of the week we've got them upcoming fundamentals to look out for. Obviously, as always, we'll keep you up to date with the markets on the website, social media. If you've got any more questions, please don't hesitate to message us. Contact insidefx.co.uk. Drop a comment on the website. Let us know if you like the video, if it's helped you at all. And yeah, hope you guys have a great trading week.